We've been very clear from here. The president has been very clear that Congress must act. This is their constitutional duty to act, and we must avoid catastrophic threats to our economy. That needs to happen. And what this will do, it will hurt the American people, cost more than 6 million jobs, and threaten Social Security, threaten Medicare and Medicaid payments. And so we're just not going to entertain scenarios.
Does that mean you've taken invoking the 14th Amendment?
What I'm saying is that I'm not going to certainly negotiate from here or do anything like that. We're just not going to entertain scenarios. This is their constitutional duty. And I've said this before. Republicans did this 3 times. They were able to do this. Democrats joined them 3 times in the last administration.
Karine, a lot of people are looking at this situation and wondering where the urgency is. Back in 2011, it took the president and congressional Republicans more than 3 months to reach a deal. Why does President Biden think he can reach one with Republicans in 3 weeks?
We've been very clear, right? We've been very clear of what this could mean for the American people. This is their constitutional duty. When we're talking about the spending, this is something that Republicans and Donald Trump spent already. We're talking about spending that already occurred. And in the last administration, Democrats did the right thing and came together with Republicans and dealt with the debt ceiling 3 times. 3 times. It is their constitutional duty. It is what they are supposed. Congress took an oath, right? If you're a congressional member, you take an oath to the American people and what you are going to do the right thing, essentially. And this is part of their duty, to get this done. And so the president has been very clear on this. His administration has been very clear on this. He's going to have a meeting with them a week from today with the 4 leaders. He's going to again reiterate how important it is for them to move forward. And they need to they need to deal with this immediately, deal with the debt ceiling immediately. This is something that they can do today if they choose. And we cannot be a deadbeat nation. We cannot. This is something that we have been able to do in the past, 78 times since 1960. 78 times since 1960.
Good evening, friends. I have important news to share with you this Wednesday. A few more states will be sending out relief checks in May and June. These payments could be worth thousands of dollars. But some individuals may have to take action and request these checks from the federal government. My dearest friends, please make sure that you watch until the end of this video. Also, this coming Friday, I will be announcing several winners for the Walmart gift card giveaway. If you'd like to enter the weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you watch and then comment on, the greater your chances, my friends, of winning the giveaways. The Fed's most aggressive rate hiking campaign in 40 years may finally come to an end. The Federal Reserve just raised its key short-term interest rate by a 1/4 percentage point on Wednesday and did signal it could now pause, and that's if inflation continues to ease as expected. In a recent statement after a 2-day meeting, the central bank removed previous guidance that some additional rate hikes may be appropriate to lower yearly inflation to its 2% target rate. Instead, it said its policy-making committee will closely monitor incoming information and assess the implications for monetary policy. The central bank stopped short of stating that rates are probably high enough to lower annual inflation to the Fed's 2% target, as some economists had originally anticipated. That likely would have been a preference for a pause. But still, if inflation and the labor market show signs of cooling down sufficiently by the Fed's mid-June meeting, as many economists expect, Fed officials appear to be inclined to halt the rate increases. Otherwise, it could bump up rates again, despite the growing risk that the moves will trigger a recession later this year. Fed Chair Jerome Powell said at a news conference, "Our future policy actions will depend on how events unfold. we are prepared to do more if greater monetary policy restraint is warranted. Jerome Powell also stated that the Fed did not formally decide to pause its rate hikes, but he pointed to the deletion from the statement of the guidance that further rate increases may be appropriate. The Fed repeated that it will also consider the effects of the Silicon Valley Bank crisis, which has prompted banks to tighten lending standards, and that's likely to weigh on economic activity, hiring, and inflation. So in other words, if it's tougher for consumers and businesses to borrow, that could lessen the need for more rate increases. Although many economists and the Fed staff believe that the rate increases will tip the economy into a recession later this year, Jerome Powell said hiring is still so strong, it is possible to cool the labor market enough to bring down inflation without triggering a downturn. Although consumer price increases have softened since then, a core measure that excluded volatile food and energy items has climbed more than expected this year. That prompted future markets to predict the Fed would lift rates as high as 5.6% in 2023. But the March failures of Silicon Valley Bank and Signature Bank have caused financial institutions to toughen lending standards, and Fed officials have said that's likely to slow the economy and inflation, leaving less work for them to do. This week, First Republic Bank collapsed as well. More than 2 years have passed since the U.S. federal government approved the third and last stimulus check. The payment was part of the March 2021 American Rescue Plan and offered a $1,400 check for eligible taxpayers and up to $2,800 for couples who filed joint returns. A few weeks ago, New Mexico Governor Michelle Lujan Grisham announced that the state would be sending out checks to all eligible households in June. The governor's office said in a recent press release, taxpayers who received a refund by direct deposit on their 2021 return will receive the rebate by direct deposit. All others will receive a check in the mail. So the first round of checks will be made through direct deposit, and then the state will begin sending the remaining checks in the mail. Residents can receive a refund of $500 for single filers and then $1,000 for joint filers. On May 15th, the city of Chelsea, Massachusetts, will also send a third round of checks to eligible low-income households that is worth between $200 and $400 in the form of EBT cards. In addition, low and middle-income residents of Boulder, Colorado, will be receiving these rebates as a way to offset the taxes that are paid on food. To be eligible, applicants must have lived in Boulder, Colorado for all of 2022. The income for individuals cannot be more than $43,900 a year. For households of two, income cannot be more than $50,200 a year. For families of four, the income cannot be more than $62,700 annually. Well, my beautiful and most amazing friends, that is the end of my daily stimulus update video for today. Thank you, friends, for being here every day and for being part of my community. To say thank you, I will be announcing more winners this coming Friday for the Walmart gift card giveaway. If you'd like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dear friends, the greater your chances of winning the giveaways. Thank you and have a wonderful and very blessed week.